Hi, this is Kerry Artek with Wicked Stocks, bringing you your daily NVIDIA report for Monday, December 16th, 2024. Let's take a look at the charts. Let's start with the big picture, and I'm just going to show you long-term support, long-term resistance in this market. We're nowhere near either one, but it's worth just showing that if we were to rally over the next month or two, the upper 170s and climbing as a one-year channel top that is very sellable resistance, whether you're exiting a long position or establishing a short position, we can fall away from there for weeks and months to follow. And downside, we are actually anticipating what I'll just call the mid 120s. 123.54 to 126.89 is now considered kind of a 2 to 3 month target, or 2 to 3 week target. Sorry, I'll get to that in a moment. I will mention that if over the next few weeks we happen to settle below 123.54, then we've got even more significant longer term support well below the market at 101.17. And if we were over the next few weeks to settle below 123.54, that would set off, I would say, a 3 to 5 week sell signal down to 101.17, where we could bottom out through the balance of the first quarter and round up even to new highs from there. But until then, the 123.54 to 126.89 area is a meaningful zone of support. And I'll just continue with the fact that having closed last week below 137.15 for the first time, below the low of the high, that is a sign of weakness in its own right, does maintain now a 123.54 to 126.89 2 to 3 week target where we could bottom out through January and round up to new highs from here within 3 to 5 weeks, I would say. Yeah, and I think that's probably where I will leave that concept. And yes, once again, if we were to close below 123.54, that would set up 101.17 as a 3 to 5 week target. I don't anticipate seeing 101.17 unless we close below 123.54. I think that kind of covers kind of the long-term, the 2 to 3 week dynamic. I will say for the day itself, I've got 140.66. That is that descending channel top, and it's dropping every day, and it lines up pretty well with 137.15 on the weekly chart. Once again, 137.15 is the low of the all-time high, so it has its own resistance quality. It has its own pivot point quality. We closed below it last week for the first time, anticipating 123.54 to 126.89 over the next 2 to 3 weeks, and holding below 140.66 will keep that area in reach. You can see here on this chart that it could be sooner than 2 to 3 weeks. It could be potentially this week. On the way down, we have, of course, that 129.13 3/8 Fibonacci that we've been talking about for weeks. 129.13 3/8 Fibonacci from the August low against that more recent November high. It actually, given Friday's volatility, is attainable today. I'm not going to say that I expect it today. There are all kinds of minor points all the way down, well suited for aggressive day traders, but it really is 129.13 that I think is the level to buy into. If you've been short now for the last day or the last week, it is the level where you could take some profits, because we could bounce nicely from here for several days back to the 140.66 descending channel bottom. If we close today below 129.13, actually tomorrow we should test the targeted 122.46 to 124.86 region. That is on the daily chart what we find on the weekly chart at 123.54 to 126.89. The 122.46 to 124.86 area is your profit-taking zone if you've been short or are short on the way down. It is an area that can contain selling through January, and once tested, once again, we can round up to new highs within 3 to 5 weeks. Of course, that would obviously would have a lead on that with a settlement above 140.66. That would be our upward pivot point as we move into January trade. I don't expect to see that today, but we could cover the upside now that if we do close above 140.66. Ultimately, I'm anticipating a 3 to 5 week rally into the low to upper 160s. This band of channel resistance, 161.82 to 167.03, is climbing on a gradual basis. It will, by middle to later January, be in the mid 170s, and it would be a 3 to 5 week target above 140.66. So if we close today above 140.66, which I think is a long shot, but it is possible, and if so, it does set up a rally that I would expect by the end of January to reach the what is now in the low to upper 160s. On the way up, just so you know, 3 to 5 day swing traders can go long with a settlement above 140.66. Let me call that 1 to 2 week swing traders. Within a day or two, we could test 147.01, where a high can be placed on a daily basis. But closing above 140.66 is your goal long strategy as we move through the rest of December and into January. I've already mentioned how we can anticipate upward continuation into what is now the low to upper 160s and climbing following a settlement above 140.66. So 3 to 5 week swing traders can go long with a settlement above 140.66. 1 to 2 day, 1 to 3 day swing traders can go long above 140.66, anticipating 147.01. And within a week or two of closing above 140.66, I would expect 153.97. This is a level that may contain weekly buying pressures when tested, but really I think I'll keep the 147.01 and the 153.97 level as mere session containment levels on the way up to what would be, under that scenario of closing above 140.66, a 3 to 5 week objective into the 160s. A downside, once again, I'll repeat myself, but we really don't have a whole lot in terms of support to hang our hat on until we test 129.13. Solid support for the day, may contain selling into later week. From here, we could round up to this descending channel top at 140.66 within 3 to 5 days. So your 3 to 5 day swing trade for the day and into later week is selling 140.66, buying back at 129.13. You could also buy 129.13 and take profits on a 3 to 5 day swing trade back up to the 140.66 descending channel top. But just know that we are nonetheless anticipating this low to mid 120s as a 2 to 3 week target below 140.66, which would likely be realized this week, probably tomorrow if we close today below 129.13. 122.46 to 124.86, solid zone to take profits on a short position, 2 to 3 week swing traders, and a solid area to go long. I'm talking not only to 3 to 5 day swing traders, but also 3 to 5 week swing traders who can anticipate then bullish continuation as we move into January trade. Last thing I will say, and it's just a heads up, that in the event we were to close below this 122.46 area, and on the weekly chart that is actually 123.54. If we were to close below that at the end of the week, we are expecting the very low 100 region within 3 to 5 weeks, where we could bottom out through the rest of the first quarter. So if we were to close below 123.54 over the next week, 2 or 3, and I'm sorry about all those beeps, you may consider reaching for 100 or 105 strike out of the money puts that don't expire for at least I'd go a couple, 2-3 months out on that 3 to 5 week play. Until then, as we slip into the low to mid 120s, assuming we do over the next week, 2 or 3, you may consider just sort of reaching for perhaps 175, 180, 185 strike out of the money calls. That this is more like a 2-month play, I think, 2 to 3 month play. So I would go with a 6-month expiration if we're testing 123.54 to 126.89. This is an area where as we're testing it, those 180, 190 strike out of the money calls will get cheaper. It'll be a prime opportunity to buy those on a 6-month basis. That is a big picture play, and we'll be talking more about that as we presumably slip into the mid 120s over the next week to 3 weeks. Please click like, share, subscribe. Check out wickedstocks.com. We've got daily Triple Q, daily SPY analysis, 2 stock picks every week, weekly Apple stock analysis, so forth and so on. You can see it for free by going to wickedstocks.com and signing up for our subscription. You get 5 days up front. You can bow out during that time if you don't want to be charged. Otherwise, you segue into a monthly subscription, which you may actually appreciate over the longer haul. I'm going to leave it at that for Monday's NVIDIA report. I'll be back, of course, tomorrow with Tuesdays. You have a great day.